Imagine this. You're staring, like really focused on a live trading chart, right? Candles flickering up and down. Your heart's probably doing its own little pitter-patter. You're about to jump into a trade, and that old familiar question starts whispering. Or maybe it's screaming in your head. Is this going to be a winner, or am I just going to lose money again? We've all been there, haven't we? That moment of truth, that, intents need to be right, but what if? What if that very question, that whole focus on predicting, is actually what's holding you back? What if, like trading legend Mark Douglas suggested, winning consistently isn't really about predicting the next move at all? What if it's about mastering something much, much closer to home? Welcome to the Deep Dive. We dig into incredible sources to pull out the most powerful insights just for you. Today, we are plunging deep into Mark Douglas's classic foundational book, Trading in the Zone. Our mission here, in this deep dive, is to figure out how you can shift away from that emotional roller coaster and become what he calls a trader in the zone. That kind of elusive, highly sought-after state of, well, calm, fearless, and consistently profitable trading. And let's be honest, for many of us, the emotional side of trading, it often feels like the biggest hurdle, right?
It really does. And Douglas's genius, I think, was showing that the market's biggest challenges aren't really the charts or the news. They're not external factors. They're far more personal. He makes us face this sometimes uncomfortable truth. Our own psychology, not the market itself, is the real game changer. Understanding these internal psychological things. It isn't just helpful, it's fundamental for anyone who's serious about making it long-term in trading.
Okay, so if staring at the charts isn't the main event, where does Douglas say the real fight is happening?
Well, he's pretty radical here. He basically says the market, it's neutral. It just moves. It doesn't have it in for you. It doesn't care if you win or lose. The actual battlefield, he argues, is completely internal. It's right there between your ears. We're the ones bringing all our emotional stuff, or fear, or greed, our ego, to the market. And that, he says, is why we get what he calls inconsistent performance, which is really just a nice way of saying we mess things up for ourselves.
Oh, that hits home. It's so relatable. I definitely remember, early on, winning a couple of trades, feeling like a genius, like totally invincible, and then immediately taking bigger risks, maybe too much leverage, and boom, a huge loss just wipes you out, and all that confidence evaporates. Gone. Or the flip side, you take a big hit, and then you're just scared, totally paralyzed by fear. You hesitate, and then you just watch the perfect setup sail by without you, the one that could have actually helped you recover. It really feels like this awful cycle you can't break free from.
Yeah, and it makes you ask, why do we keep doing that? Why fall into these very human traps over and over? Douglas's insight here is just incredibly powerful. He says, the market is random. You can't control it, period. But, and this is the key, what you absolutely can control is your response to it. It's so tempting to blame something else, right? The market did this, the news said that, my broker, whatever. But the real problem, and therefore the solution, is how we react inside. That constant back and forth, that emotional tug of war between fear and greed, that's what directly causes the inconsistent results. So mastering those internal reactions isn't just like a good idea, it's everything, it's paramount.
Right. So for anyone listening now who's felt that pull, that urge to chase a losing trade or that freezing feeling when you should act, Douglas offers this really profound way to reframe it. He suggested if you can get a handle on those emotions, the market stops being this scary, unpredictable monster. It actually turns into what he calls just a game you can play calmly, logically, consistently. Okay, so if mastering emotions turns the market into just a game, how do we actually play it well? Douglas's answer is kind of surprising, almost counterintuitive. He says, stop trying to be certain, forget guaranteed wins. Instead, you need to embrace probability thinking.
Exactly. He nails this. Every single trade, he argues, is just a probability outcome. It's not a sure thing. Think of it less like predicting heads or tails on the next coin flip, and more like understanding that over, say, 100 flips, it'll probably come out close to 50-50. That's a critical difference. Your edge, your strategy, your system, it's just giving you a slight probability advantage over time. It's never, ever a guarantee on any one trade.
That's the heart of it, isn't it? It's not about this trade. It's about the outcome over a whole series of trades. Like your coin flip example. You might get 5 heads in a row right at the start, sure. But over the long haul, over those 100 flips, the pattern's going to even out. Those first few flips, they don't really prove anything about the overall odds.
Precisely. And that is a huge mental shift for most traders. It really is. Like Douglas famously said, stop expecting certainty, start thinking in probabilities. There's that story about Steve Wright. A pro trader had a system with like a 55% win rate. Pretty good edge. Over hundreds of trades, he made money consistently. But then he hit a rough patch, maybe 5-6 losses in a row. And he started doubting everything, ditched his system, started tweaking things, trying to find something better, and just ended up losing more money. He learned the really hard way that you have to consistently apply your edge over a long series. You can't just react emotionally to a few losses.
Yeah, so if you can get to that point where you execute each trade almost like a calm coin toss,
Hmm.
you know, you're not getting overly excited by a win, not getting crushed by a loss. That seems to be the quiet secret weapon of the pros. It detaches you emotionally from the single outcome. And that lets you build the consistency everyone's chasing. But, okay, this whole probability mindset, it often gets completely derailed, right, by that emotional trap we keep mentioning.
Mm.
That just awful cycle of fear and overconfidence, like a seesaw constantly knocking us off balance. And it's so destructive.
Oh, absolutely. It's a fundamental problem. It just chews away at your discipline. A trader takes some losses, fear creeps in, naturally, and that fear leads to hesitation. You second guess yourself. You miss good trades you should have taken based on your rules. Then the opposite happens. You hit a winning streak. Suddenly you feel invincible. Overconfidence floods in, and that leads to maybe overtrading, taking way too much risk, or just totally ignoring the rules that got you the wins in the first place. It's this cycle that just keeps pulling traders away from disciplined execution, the very thing they need for profit.
It's like our brains are almost wired to mess things up. We're either flying high or totally frozen. I remember weeks where I was convinced my trading platform was like actively working against me. But really, looking back, it was just my own mental state, my own reactions getting in the way. Douglas offers such a powerful antidote here. He says the real skill, the master skill in trading, is accepting losses without pain. Now, that doesn't mean liking losses or wanting them. Nobody wants to lose money. But it means accepting them as just, a normal, unavoidable part of the process when you're dealing with probabilities.
That's a huge point. Accepting losses isn't about giving up or being careless. It's about neutralizing their emotional sting. Think about that trader, Rahul.
Yeah.
He kept doubting his system every single time a stop loss got hit. Sound familiar? So one day, he just decided, okay, I'm going to commit 20 trades. Follow the rules, no matter what. The first 6 trades, losses, every single... Now, normally that would have sent him spiraling, changing rules, panicking, but he stuck with it. He had made that commitment. And guess what? The next 14 trades actually put his account into profit for that series. It taught him this incredibly deep lesson. A loss isn't a personal failure. It's not proof your system is broken. Loss is just. It's part of the game. An expected cost of doing business when you play the probability game.
Wow, just imagine that shift. Imagine the clarity you'd have, the better decisions you'd make, if you could just calmly accept a losing trade as, okay, that was one of the expected losses in this series, not some big personal failure. That, Douglas says, is the step that truly liberates you. It paves the way for real consistency. Okay, so how do we actually build this kind of mental armor, this internal resilience? Mark Douglas gives us what he calls the 5 fundamental truths of trading. You could almost think of them as like the core principles, the absolute bedrock for any serious trader. These aren't just nice ideas, they're really the framework for developing that winning mindset.
It's fascinating, isn't it? Because these aren't like complex trading strategies or secret indicators. They're actually quite profound statements about how the market really works. And in internalizing these, really letting them sink in, that's what allows a trader to change their whole perspective, to move away from reacting emotionally all the time.
Yeah, they're not just bullet points to memorize. They're pillars, really. Each one needs a bit of thought. So let's quickly walk through these 5 fundamental truths Douglas lays out. First, anything can happen in the market.
And that's not meant to be scary. It's actually freeing.
Right. It shatters that illusion that we can predict or control everything. So you focus on your response, which you can control. Okay, second, every single trade is unique.
This stops you from projecting, right? Thinking this setup looks just like the last one that won, so this must win too. Or the opposite with losses.
Exactly. It keeps you present. Third, the distribution of wins and losses is random for any given set of variables.
Back to probability. You can't know the outcome of the next one. Your edge only shows up over a whole bunch of trades.
Precisely. Number 4, your edge is only a probability, never a guarantee.
It's just a statistical advantage, not a crystal ball. Which means risk management is absolutely crucial because losing streaks will happen.
Absolutely. And the 5th truth, every moment in the market, and thus every trade, is independent of the previous one.
Yeah, the market doesn't remember your last trade. It doesn't owe you anything. Each moment is fresh, clean slate. No baggage from the last win or loss should carry over.
We heard this great little story about an experienced trader who literally had these 5 truths written on sticky notes stuck all around their monitor.
Yeah.
And before placing any trade, they'd read them out loud.
Yeah, it wasn't about just memorizing words. It was a ritual, a mental reset button before every single decision, a constant reminder. This is about discipline. It's about managing probabilities. It's not about chasing certainty or trying to be perfect.
Such a simple but really powerful practice. So if you're listening, maybe try that. Write them down, put them somewhere you'll see them. And just notice over time how starting to internalize them might change how you approach things. It's about building that foundation, trade by trade. So internalizing these 5 truths, it really does reshape how we see the market. And when these ideas truly start to click, when they become second nature, they open the door to what Douglas calls the zone, that almost mythical state every trader dreams about reaching. This is the peak, really.
Yeah, and he describes the zone not as like being right all the time or predicting perfectly. That's not it. It's more about achieving this incredibly profound state of mental and emotional clarity. It's that flow state people talk about, where the trader is just fully present, totally disciplined, and genuinely fearless, which allows them to just execute their plan, their system perfectly without any internal friction or doubt.
Just think about that for a second. No hesitation when your signal appears. No stress if the market jiggles around a bit. No greed making you hold on too long or chase bad trades. And absolutely zero fear when a trade initially goes against you. In the zone, trading stops being this high-stakes gamble, this emotional war, and it becomes a structured, almost easy process, like breathing. And this, Douglas insists, is the level where the real pros consistently operate. He even said himself, when you are in the zone, the market feels effortless.
And that feeling comes from a profound shift in perception. When you're in that zone, the market's randomness doesn't cause anxiety anymore. It's just the backdrop, the environment where you execute your probabilistic edge. All that internal chatter, the fear, the hope, it just goes quiet. And that allows for objective, clear-headed decisions and consistent action. That's the hallmark of mastery. You hear pros describe it sometimes, like the charts almost speak to them, not in a mystical way, but leading to calm, confident execution without all the usual overthinking and panic.
Yeah, so if you could just picture that kind of magic state. The charts are crystal clear, your execution is calm, disciplined, completely free from those pulls of greed or fear. That's the goal. That's trading in the zone.
So as we kind of wrap up this deep dive into Mark Douglas's Trading in the Zone, the main lesson, it couldn't be clearer, really, market success. It's mainly about mastering your own mind, way more than just relying on a strategy or indicators or the latest news flash. Exactly. Strategy is vital, no question. It's your tool. But a tool is only as good as the person using it. The real power, the ability to win consistently over time, that comes from within. It's inside your own head. It's about building that internal structure, that mindset that lets you actually use your strategy effectively within the market's probabilities without letting your emotions hijack the process. It's the inner game that unlocks the outer results.
Well said. The key takeaways, then, are pretty simple, but incredibly profound. Learn to accept losses. Not as failures, but just as a normal mathematical part of the trading business. Shift your thinking. Embrace probabilities, not wishful thinking about certainty. And by doing that, you start to neutralize those destructive emotions. You move closer to that zone where consistent, profitable trading starts to feel, well, almost second nature, almost effortless.
The market itself. It's wild, unpredictable, uncontrollable force of probabilities. You can't tame that. But mastering yourself, mastering your mind, that is the ultimate trading edge. That's something you can control. And once you truly master that internal landscape, well, then you really do become a trader in the zone.
And maybe that's the thought to leave you with today. What if the biggest thing holding back your trading success isn't the market's fault at all? What if it's simply your own beliefs, your own reactions to the market? Something to chew on until our next deep dive.
Hey, listeners. If you enjoyed this podcast, don't forget to like and subscribe to our channel for more amazing content. And if you found value in this episode, share it with your friends. You never know who might need it today. Also, let us know in the comments if there's any of your favorite books you'd like us to review next. We'd love to hear from you.